you've been itching to buy a house in your 20s or whatever age, the first thing that I would do is to... Hi everyone, this is Gabby Maxino with Halo Realty, and we are back in my home office. If you're new to this channel, my name is Gabby Maxino. I'm a full-time real estate agent licensed in both New Jersey and New York, but I do specialize in Central Jersey. I am passionate about real estate and educating buyers and home sellers, the home buying process or the home selling process, and in between I also talk about my experiences as a millennial realtor. Welcome, and I hope you enjoy this video, and if you do, I would really appreciate it if you click the thumbs up, and if you want to see more of me, click the subscribe button and ring the notification bell. So if you've been following me since the beginning, I started my channel about a few months ago, and I noticed that one particular video is gaining some traction and is starting to have a lot of views, and I also got quite a few comments on it, and I also got some leads. It's the how to buy a house in 2020 condensed into one video, the home buying process explained. Since I realized that a lot of you are interested in learning more about the home buying process, I decided that I'm going to create a series. And I'll be going over in depth the home buying process. Just a disclaimer, this is not a financial advice, nor am I a mortgage lender, but since I am a realtor and I want to guide you through the whole process, and I believe this is the first step, and actually I'm in this process right now, I thought that maybe I'll share some of what I'm doing. I believe that the best investment you can make in your 20s is to buy a home. So what better way to do that than by educating yourself so you know how to prepare to become a homeowner. All right, let's get into it. So before I start, I do want to say that this is specifically going over creating a plan. It's a 1 to 3 year plan to get you set up for success in order to obtain your dream of home ownership. And I will also start off with the minimum lender requirements in order for you to buy a house. So there are 4 lender requirements that you have to focus on. Like I said, I'm going over the basics. I highly recommend that you speak to your mortgage lender in order to verify everything that I'm saying. And also, everything is subject to change. So 2 years, 3 years from now, when you're finally ready, some of these can change. Alright, so the 4 lender requirements are having a good credit score, 2 years of tax returns, bank statements, and most of the time they will also ask for cash reserves. In short, they want to make sure that you have good credit, that you have income, you have money for down payment, and like I said, some banks would ask for cash reserves depending on the program that you're going to choose, meaning they want to make sure that you have enough money to pay for at least a month, 2 months, 3 months in the bank of your mortgage payment. So there's that. That's kind of the bare minimum. So if you don't have a credit score, then you need to start building it. And if you don't have a job, then you would need to have a job for at least 2 years. Even if you change jobs, that's okay, as long as you can show that you've been working for at least 2 years. And of course, you need some sort of down payment, because even though you are borrowing money, you need to put some sort of down depending on what type of program you're going to choose to buy a house. Okay, so like many things in life, especially a big purchase like this one, you need to create a plan, because as amazing as it is to own a home and be a homeowner, you want it to be a blessing. You don't want it to be a pain to maintain. You know, if you're not prepared financially to own a home, then you're gonna hate being a homeowner. Because that's another thing you have to prepare yourself. You're not just a renter anymore, where you can call your landlord and say the faucet is not working, something is clogged, or the heat is not working, I don't know. But anyways, you can't just call your landlord and tell them go fix it. Once it's your house, it's your house. You need to figure out a way to fix it, and that can be overwhelming to some, especially if they've always had a renter mindset. So you want to make sure that you are prepared prepared financially, because if you need to call a plumber, electrician, or an HVAC guy, or whatever it is that you need, you're prepared and you have the money set aside. So the first thing that I would do is to organize your monthly payments and figure out how you're spending your income. The reason why organizing your monthly payments is the first step is because you want to make sure that you are financially prepared to pay for a mortgage every month, assuming that you still have these monthly payments that you're paying recurringly every month, even if it's as small as how much you spend on eating out. So you have to see where you can kind of cut corners, where you have to sacrifice a little bit, and decide what's important to you. So of course there are monthly payments that you kind of can't get rid of unless you pay them all in full. If you're in America, most of us in our 20s who went to college will most likely have a student loan, and it is ideal to pay off your student loans and any type of debt that you have before you buy a house. But at the same time, it's still possible to buy a house even with student loans, car payments, credit card debt, etc. You just don't want to have 100% full credit utilization or anything like that. I highly suggest that once you organize all of your monthly payments, figure out what your debts are, and then pay off as much debt as you can and pay off the highest interest loans first. Also, just to go back on the monthly payments, the reason why monthly payments are important is because the way lenders qualify you for how much you're approved for is determined by debt to income ratios. So the highest debt to income ratio I know is through the FHA program loan. And like I said, things can change. I'm not a mortgage expert, but the basics and what I've been hearing from, being a realtor, it's 55% debt to income ratios. So this means that if you make $60,000 a year, you divide that by 12, that means you make $5,000 a month, and you multiply that by 0.55%, you're only going to be qualified for $2,750. But then after that, they also have to take into consideration all of your monthly obligations. And monthly obligations are your student loans, car payments, personal loans, and credit card minimums. It's not limited to that, but that's typically what most people have, so that's what they're going to use. So let's assume you have a $300 car payment, so now you're gonna minus $300. Let's assume you have a $300 student loan every month that you pay for. So you minus all of the expenses, and then whatever is left is what you're approved for. That monthly payment that you're pre-approved for, they're going to add up everything. So it's called PITI, P-I-T-I, principal, interest, taxes, and home insurance. So those are the 4 things that would make up your monthly payment for your mortgage, and they take all of that into consideration. So the only thing that's not included would be your utility. And another tip too, taxes make a difference, and taxes are also one of the things that will never go down and will never go away. So even if you paid for your principal and you don't have a mortgage anymore, you will still have to pay for your taxes. So that's something you need to take into consideration. And then after that, once you pay all of your debt or most of your debt, then you need to start saving. I will actually create a whole new video on saving for a down payment and closing costs in my next video next week. So if you don't want to miss that, definitely hit the subscribe button and ring the notification bell. But anyways, so one of the things that I really learned this year during this pandemic and coronavirus is to pay yourself first. So I'm starting to actually put away money for myself, for emergencies or whatever it is that me and my husband want to do in the future, away for the both of us. And then we pay for everything else. When you do something like this, you don't even realize that you're actually putting a lot of money into the savings account, and all of a sudden it just grows. And you just don't touch it as if it's not there. So we don't go out because we think we don't have money, but it's actually in our savings account, and it really helps with goal setting and getting what you want, and just to have some sort of emergency fund. So every week we do put aside some money for the both of us from both of our checks. And then as far as your credit score, pre-coronavirus, qualifiers. The FHA program used to be able to accept 580 credit scores. But nowadays, that's not really the case. Some people with 580 credit scores are not able to get loans. Although I know some lenders are still taking them, minimum would be 580. But like I said, not all lenders do it anymore. They don't qualify people with 580 credit score. I only know one lender who can probably still qualify you with a 580 credit score. So your target really is 640, but if you want the top tier, the ideal credit score that you need to buy a house is 720. I really hope this video helps you out. I went through quite a lot today, but like I said, if you don't want to miss the saving for a down payment video next week, then don't forget to hit the subscribe and ring the notification bell. See you guys soon.